Martin from Secrets, the channel for learning about trading and investing. Welcome to daily stock market analysis show, where we read the technical charts and then try to understand what happened in the market and then plan for a better trade for the next day. And that's for April 4th, tomorrow, Thursday, 2024. So today we had a buy on dips that happened in the market. The market got bought after initial dip and then reversed, and then some resistance was seen on the Nifty in the afternoon, and while Banknifty was performing better than Nifty by closing green. Let's see more details from the charts. We'll come back here. We'll just quickly see the charts. Let's go in there. So the Nifty chart is what we are seeing. This is what we are. So last 4 days we are getting the resistance at the all-time high zones of 22,530. Actually, exactly the same thing happened. So that's a place where the market is consolidating, facing the resistance yield. Or let's say today's candle is actually inverted hammer. Inverted hammer could be a trend reversal if the law of that towards the ongoing strength. So that means it's a reversal from the downside possible if the price goes below the today's candle's low. And there is also a change in polarity on the downside. Is possible because this is acting as previous support is acting as resistance, and then so price can move down. Change in polarity downside is possible. So it's a major crucial zone. This zone, there are multiple resistances. You have to be very, there is high risk of the reversal that this can happen here. So if there is a close that's happening above that zone of 530, 550, then that's when we can see that there is a lot of space more to go towards the 22,800, 900, 23,000 eventually. So, but this is at a heat zone, we can say. Banknifty is actually a close better. You can see that candle is bullish, absolute bullish, and it's completely, it's almost engulfed the previous candles, but still it's in consolidation net if you see the last 3 days. But very good performance, and managed to close at 79.6.17, flattish move overall, but the candlestick is green and bullish in nature. It's getting closer and closer towards the 48,000 and 40,200 previous highs, and then all-time high is still another 1,000 points away, right? Which is not a big deal for bank. If it really moves, it can move to 400, 500, 600 points just like that. Right, so all eyes will be on this 48,200 zone, right? Until that's cleared, anything would happen. So that's what we have to make out. And let's also see the resistances and support levels for the Nifty. So basically, the first resistance will be the all-time high at 22,500, and then 2600, 2700, 800 likewise. So uncharted territory the upside. Downside, support first would come in at 22,200 zone nearby, which is 22,190 precisely because it's 20 exponential moving average. After that, you have 22,000 is a grounding number, and also very close by 50 pins down. You have the 50 exponential moving average 21,958. That's the next support. That is breached, then it can go all the way to the previous swing low. So as of now, higher high, higher low pattern is also maintained. Right, price is not falling too much. Quick reversal has happened intraday. Look at this, what has happened today. Market in the gap down and then recovered fully, and then met with resistance and gave some of the gains. Banknifty did not do that. It gapped down, recovered, and then maintained that. So it was more strength there. Let's get back to the slides. So we have a flattish close today with 19 points lost, flattish red, you can say, and it was a buy on dips, and it is an inverted hammer. We talked about that. Remember, we are in the mid of a 34% of rally, and market close to 22,435. Banknifty also was buy on dips, but it managed to close with positives in nearly 80 points with a wide range bullish candle. Also, candlestick patterns are more bullish, but overall the flat green close, you can say. Remember, it's maintained the 46,500 and 46,624 is what close. The rally is trying to recover from the 8.5% retracement which had rallied on net 26% rally. So in intraday, it was also buy on dip. We already seen that, but the recovery was solid. Support resistance we already seen. I'm not repeating that. So what's in favor of the bulls? The indices have closed and maintained the price gains so far. Market is getting bought on dips and not ready to retrace too much. Banknifty is also performing better and managed to close better than the index, main index have made. Momentum is RSI is maintaining the bullish zones, almost there. Just dipped slightly below 60, but it's maintaining the RSI. You can say Nifty, Banknifty both. Banknifty is maintaining absolutely 61 RSI. And hello patterns maintained. We have seen that the price action is above 20 expression moving average supports. 80 extra indicators crossed over the bull zones and maintaining that, which is cooled up further. So it's 25% of retracement has happened last 1 month. On the India week's call off on 11.3 sounds back to the very low volatility regime once again. Well, Japan's are showing some expansion beginning on the upside, but it's more towards the consolidation what it is showing in the last 3 days. But the beginning of the expansion on the upside that's seen on both indices can be potential up moves indicating. All the major industry sectors closed today red, except for the IT and the metal close green. All its bullish momentum and probably some sideways momentum. Except the IT, which has fallen to the short term. So it's not bearish overall, except for one of the sector. That's all. Just managed to climb above the bullishness or in the sideways and then attempted to climb in the bull zones. Heavyweight stocks that contribute maximum to the index are all close red today, but the fact, except for the HDFC and TCZ, HDFC Bank and TCZ, they are close green. But the fact is that it remains bullish and sideways. None of them are bearish except for the Nifty. There's one stock in the heavyweight 7 stocks if you see is in the red zone, but otherwise it's fine. So major sectoral indices and the heavyweight stocks that contribute to index are all giving mostly in the favor of bulls, but not at the end of the bear zone set. What's in the bear zones then? The previous resistance zone consolidating for the 4 days in the same place. It's a trouble. You have some major events coming this week's RBI outcome and the Fed outcome of the Fed speech outcome that happens tonight and tomorrow. So major indices camped down, the US major indices. So all of them are camped down and they're struggling as to know what for them. They're also waiting for the event speech outcome or something, but US indices have slightly fallen from the peak, so there is possibility that retracement could extend and that could reflect in our market also. Dollar is showing some green and rupee is also rising up and means becoming weaker and weaker at 80, heading towards the 83.5 once again, all-time high levels. Although it's been managed by the central bank all these several months now, there is a possibility that it can break out towards the top of the channel to 84, 85. That possibility is there. So that's not great news for the markets when the rupee is depreciating. Crude oil is also spiking up and heading out of that trendline channel that has climbed to the 86 nearby 75.7 and it's breaking out of the channel trendline after a long time, and so there could be trouble. Gold is also all-time highs, and then these money is flowing in from one asset to the other, from the equity markets to the gold or commodity. That's the worry that indicating where the market is at the very peak, and the gold is also at the very peak. So something fishy, some warning signs may be there, right? And we have it in weekly expiry day tomorrow. The levels of the highest put calls are seen at 22,000. That's the support zone, and 22,500 is where the resistance zone is coming. So the market is likely to be in a very narrow range with few hours before the weekly expiry. So PCR is also not bullish, but it's not bearish either. It's at 80.85 PCR, and short buildup is seen today, and yesterday it was also short buildup. So that the future is negative, right? So those are what is indicated. Fyers are sellers since last 2 days. They're not big selling, but they are sellers. They have been sellers since long. They're not turned to buying. Probably after the Fed outcome, next interest rate news comes in, that's when Fyers may be turning to buyers. We're waiting for that. But Fyers not being big buyers is causing the delay in market hitting the 22K. Anyway, the verdict is like that. Market is not ready to retrace too much. Today also we've seen that it has gone on dips and the price gains momentum overall has been maintained for the last 4 days. However, given the fact that there are some Fed speech outcome and the RBI or interest rate decision that's coming down this week, and the probability of a breakout may be there, but at the same time there is a probability of breakdown or reversal is also possible, since it's been consolidating at the major resistance on in the US markets and several other factors we already seen. So it's kind of indecisive, You're not sure what could be happening. Weekly candle is indecisive as of now, although we have a couple of days to close the week. And also this indecision as a market is want to go up, but it's waiting for some event. So reversals possibilities and breakout possibility, both of that, so you have to be very cautious. So investors, as usual, whenever there is dip coming, you have to go for the long-term quality stock investments in the SIP more, or you have to play the rental income option strategies that is put in the playlist. Check out that. The traders, direction is what is required for the option buyers, and low range bound moves is what is required for the option sellers. So as of now, no direction maybe that's working, because directionally you have to just wait for that patiently, just like that, right? Only then you get that. So right now it is bullish, but it's not directional yet. So you have to wait for that breakout to happen before you go for option buying. So now, yeah, so there is a potential of reversal always there. So you have tight stop losses to the support resistance levels that we discussed in the according, not directional. And manage risks and push size. Although the weeks is low, safe as compared to a few weeks before when it was heading towards 16, 17 levels. Play it safe, but we have a major events in hand. Market is a crucial point of reversal or breakout zone, so we have to play it careful. That's all I have for the this. This is how the market charts are looking. Consolidation at the top, right? So we have covered almost all of the factors, judge yourself, and then come to a conclusion of the view. My view is that it's a crucial point in this neutral, where anything would happen. So play it safe. Happy trading, happy learning, happy investing. Bye bye.